a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about electric vehicle ETFs. Now we know that electric vehicles or EVs, they are a central focus in President Biden's climate agenda, and that is because transport accounts for about 29% of greenhouse gas emissions in the US. And in fact, last week, President Biden signed an executive order which called for electric fuel cell and plug-in hybrid car sales to account for 50% of all car and light truck sales by 2030. Now, EVs currently account for only 3% of sales in the US. The percentage is much higher in Europe and China. So there's a lot of scope. There's a lot of catching up to do. And automakers say that they would need billions in dollars in funding for a network of EV charging stations and also for tax incentives to consumers and some other measures if they have to meet these sales goals. Now, the current infrastructure bill, the bipartisan $1 trillion infrastructure bill, that has $7.5 billion in EV charging infrastructure funding, and Democrats are in fact asking for more for EVs. Now, another reason why we will see more focus on EVs going forward is because China is a leader in EVs and EV battery technologies currently, and that is seen as a threat to US manufacturing. So we could see more government support for EVs and battery technologies in order to promote US manufacturing in this area. Now let's take a look at 3 ETFs in the area by going to the code pages on Zacks.com. So the first one we are talking about is by GlobalX. It's the GlobalX Autonomous and Electric Vehicles ETF. It is the largest in the space, ticker symbol DRIV, DRIV, and it follows a modified market cap weighting scheme, pretty large with 1.1 billion in assets, and charges 68 basis points in expense ratio. And if you want to learn more about this ETF, please go to the code page on Zacks.com, read our articles, reports, and use the link to go to GlobalX webpage for the ETF. GlobalX, as you know, is a leader in thematic investing, and it has got some good research. So if you are interested in this space, you should read their research too. Now, looking at the country exposures, as I mentioned, China and Europe are leaders in this area. So you will see global exposure in these ETFs. US is 63% and rest is international. Now, as expected, Tesla is the top holding. And then you see companies like Google, Nvidia, Microsoft, Apple, Toyota Motors, Qualcomm, because all these companies are either producing EVs or working on those technologies or supporting EVs and autonomous driving technologies. Now, the second one I'm talking about is the cheapest in the space. It is by iShares, self-driving EV and tech ETF, ticker symbol IDRV. And this follows a market cap weighting scheme. And as I said, it is the cheapest in the space with a 47 basis points expense ratio, 441 million in assets, much smaller compared to the first one that we discussed. Again, you can learn more by going to the quote page on Zacks.com, and from there the external web page, the iShares web page for this ETF, and learn more what it aims to do. Now, looking at the top holdings, AMD, Tesla, Nvidia, Apple, Google, these are the top holdings. US is about 54% and rest is international. The third one that I'm talking about is by KraneShares. It is the KraneShares Electric Vehicles and Future Mobility Index ETF. This follows a modified market cap weighting scheme. It is a most expensive in the space, 70 basis points, but they all are almost similar in the same range. And it's also the smallest, 239 million in assets. And now again, you can learn more by going to the external homepage, the KraneShares webpage for this ETF. Now this has almost 30% exposure to China, which I mentioned. China is currently a leader in the space. So if you are concerned about the regulatory crackdown on Chinese companies, that is something you should be aware of. This has about 30% exposure to China. So you will see that even the top holdings are Chinese companies, and you will see Tesla and Analog Devices, other US companies also there. Now, on the last slide, I have the comparative performance compared to the S&P 500 index, and all the three ETFs, they are up between 17% and 21%, kind of matching the S&P 500 year-to-date performance of about 20-21%. And the reasons are understandable because Tesla is one of the top holdings in these ETFs, and we know that Tesla had surged about 700% last year, and this year the stock is kind of taking a breather. It is actually down a little bit year to date. So those are the three ETFs. You can take a look. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and also make sure to subscribe to all our videos so that you do not miss anything. And I'll see you next week.